What a day it's been in the stock market, folks. We've seen a lot of super interesting things happen, and I think we have a lot to talk about. As always, I like to look at charts. I think when we just talk about all this stuff and discuss and say and so on, it doesn't drive home the concepts that we're trying to make by saying, look at these things over the course of a year, several months, several years. We really want to make sure that the ideas of the stock market are not whatever is happening today. So let's have a little look at it. This is kind of a year to date. We'll go year to date on this. This is year to date S&P. We saw that the market started off pretty steady kind of through January, February, and then towards the end of February, sell-off, right? We got a nice little sell-off there. And then towards the end of March, we got the big sell-off, which bottomed out right here, April 7th, followed up by a massive day on April 9th. Now, all the talking heads through all of this, we're saying, haha, we hate Donald Trump, and so therefore, this is proof that he's doing a bad job and that he's destroying the global economy. And again, whatever your political preference is, this is pretty much all that we heard on the news everywhere, all through this right here. Now what we're hearing in the news is, well, the stock market is resilient. It's resilient. Whether we say Donald Trump's a good president or a bad president, the stock market's resilient or it's not resilient, any of that stuff, these are all wonderful opinions. And opinions don't really matter in the stock market. What matters in the stock market is that we understand how things work. And that's why I think this chart is so important. Yes, it's significant. The S&P today has returned to, it's basically break even for the year, right? We went from the S&P being down on the year about 20% to making its way all the way back to where it opened for the year, and we'll see where it goes from here, onward and upward and so on. I have posted, if you guys have been following my videos, make sure you look at this stuff. I'm going to post all the details in the description below about the videos where we talk about this, but it's so significant to know. I have two things that we look at here. This is a little bit of a longer term chart. This takes us back to the 2020 low right here. So basically the channel of the last 5 years. And whether you believe in technical analysis or not is irrelevant. What we're doing is looking at what the chart is telling us. And one thing that the chart was telling us was that this 5-year channel is significant. It's held into place. It's been tested through some difficult things in interest rate hikes of 2022, bottom of the market 2023, and then of course the tariff panic of 2025. And it's held very, very nicely. That also took us back to the high of 2022, which was when the Fed mentioned that interest rate hikes were going to start and the market corrected very, very aggressively, 20+%. And so we came back and we retested that area. So just kind of a little bit of a landscape of where everything is. So that's all super interesting. But if we get rid of that and we just say, okay, what do we have in a chart here? And this is very significant. And I've talked about this multiple times. If you've been following my videos, following my posts, you'll know about this, and it's really important. This yellow line is a long-term average price for the S&P, for the stock. Now remember, we're not looking at the Dow. We don't care about the Dow. We don't care about anything. The S&P is the standard of what we watch in the stock market. Now this long-term price, this takes us back to 2000, to the dot-com crash and so on. And remember, we had a period where current price got below the long-term price of the S&P for about 2 years back here in the dot-com crash. Now remember, dot-com crash was before there was any government intervention in the stock market. And then it got below it again in 2008, which at the bottom of 2008 was when we really started saying, okay, the Fed has to step in, there's too much leverage, there's too much money involved, and this is all going to come crashing down if the government doesn't save it. And so they did. And so those were the 2 times that the market got below its long-term average price. This is what this yellow line represents, long-term average price. 2000, 2008, the rest of the time, even in 2020 right here, where we weren't sure how bad things were going to get, quick little blip below that. 2018, big interest rate panic, touches that. 2022, big interest rate hike, we touch that. And over here on tariffs, what happens? We come down and we recheck that. Now, a couple of things are important to note. Number one, you can see with the chart on the screen, the stock market needs to have a time that it kind of flushes, right? And it comes back to some of these areas. And you can see on this chart, this is posted by our good friends from DataTrek. They do a great job with all this research. What we need to see is we need to see that as we get to extreme levels on one side or the other is typically where things tend to turn. One of my favorite quotes, Howard Marks' book on mastering market cycles, you got to read it. He talks about the simple concept of trees don't grow to the sky and things rarely go to zero. Now, there's bad companies out there that go bankrupt that have huge valuations and they make zero money. But what we want to make sure of is that big, solid, steady companies are not going to zero, and they're also not going to run to the sky. It wasn't that long ago. It was all through 2024 that we thought, good heavens, is NVIDIA going to stop going up? And then immediately we flip the coin and say, everything's crashing, everything's going down. And it's really kind of a funny situation. Going back to the S&P chart, you can see that this is pretty interesting. Looking at this chart right here, we see that the S&P bottomed out around April 7th, and then we had that huge day around April 9th. You can see this graph right here. This is from Charlie Bolello. Does a great job on just putting out market information. He does really awesome. You can see these returns here. One-day returns are significant, right? April 9th, we have a 9.5% up day on the S&P. And we'll find out how the 1 year, 3 year, 5 year plays out on that. But when we have these 5, 6, 7, 8, 9, 10% days on the S&P, it's always very significant over the next 1 year. And this has proven, this right here that we're looking at, has proven to be the case. Here was our big up day right here, and we get this big pullback, but then we're way above that 9.5% up day on the S&P. We're way above it, and in fact, we've erased all losses for the year on the S&P. So just kind of keep in mind, everybody finds every reason in the world, and we've just seen this, and I'm trying to make this video so it's really timely, but we have seen down here, well, I would even say through here, we have seen every reason in the world why this was the end of the stock market. It was going to zero. Nothing was going to come good of this sell-off, and it was going to be the biggest, worst thing we've ever seen. When all we really have to do is look at a big long-term chart like this and say anything below the yellow line should be looked at as sheer opportunity. Anything near the yellow line, which is our long-term price, should be looked at as opportunity. Now, for everyone that has said, holy smokes, I missed another dip. I missed another opportunity to buy. Keep in mind, the S&P dipped all the way back to levels that we saw in early 2024 and also levels that we saw in early 2022. So if you're saying, okay, I had a chance to buy in 2022, but then the market sold off big time, and then I had a chance to buy in early 2024, and the market rallied like crazy, well, you had another chance right here. But everybody misses it because they forget that there are bigger things at play than just the short-term panic. There are patterns, there are cycles that run through. Markets are like laptops. Does everybody restart their laptop fairly regularly? If you don't, it starts to run badly. Stock markets are absolutely no different. If you don't restart, if you don't have a correction, they start to run badly. And every correction should not be looked at as the end of the world. It should be looked at as an opportunity. But for some reason, that is a difficult concept for everybody to kind of internalize. And the result is we have seen massive runs in the stock market over just the past couple of days, right? We've seen that basically over the last month, we bottomed out on April 9th, and the S&P is up 22% since April 9th. The few things that I want to convey to you in this video is the stock market is a much bigger picture. It's not going to die on a tweet. It's not going to give up because we hit a speed bump in the economy. These things happen. They're normal. All I can say is that catalysts are so important. If we don't have a catalyst that gets markets buying, as well as a catalyst that gets markets selling, everything gets out of balance. This is a balancing process. It's something that the stock market needs to go through, and we got to remember it. We got to remember that we buy dips. We buy dips, and we look for opportunities when everybody is afraid. Warren Buffett said it best: be greedy when everyone's fearful, be fearful when everybody is greedy. And we just saw a lot of fearfulness. This was all fear, and there's still a lot of fear. There's still China's going to back out, and these deals are not going to work out, and this is the bounce before the bigger sell-off. Maybe, but those are people that are saying this because they missed a 20% opportunity to buy the S&P. Now, markets do what markets do, but knowing the cycles and keeping track of this is important. I hope everyone has a wonderful day. I hope you're profitable in your stock trading. It was a behemoth day for me. We'll talk about that in upcoming videos. Thanks, everybody. Happy trading.